10-year note yields move lower to end the week, closing out at about 365 today, down about 2 basis points, just above the year-to-date low of 360, which was marked on Wednesday, just earlier this week. Now, a lot happened numbers-wise this week, but ultimately at the end of the week, we saw a move lower in yields based on an interview and a story from former Federal Reserve Bank President Dudley, who talked about the need to cut 50 basis points next week. That's after the market had already come to grips with the fact that it was likely only going to be 25 after inflation numbers were not quite as low as they would had hoped. And we saw expectations shift from the possibility of a 50 basis point cut to only 25. Well, now we're starting to see that odds of those 50 basis point cut odds rally again, going out this week ahead of the weekend at about 50-50. So a lot going on. All will be resolved next Wednesday when the Fed does meet and they do decide whether they're going to be cutting 0, 25, or 50. Right now, it's sort of between 25 and 50 basis points. We'll have to wait and see. But 10-year note yields marking lower on the week and the day, closing out at 365. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice the volatility actually started to nudge higher today as yields were moving lower. Now, taking a bigger step back, despite the fact that yields or volatility was slightly higher on the day, it was still lower on the week as yields moved lower on the week. Lastly, let's talk about what we do have next week. We do have retail sales coming out. We have a 20-year auction. We get some housing data, but all eyes and all focus will be on SEP FOMC and the post-FOMC press conference when we get to hear directly from the Fed chair. As I mentioned earlier, the market is hanging its hat on a 25 basis point rate cut with the possibility of a 50 still lurking out there, and that's based on Fed fund futures and Fed fund pricing odds. So a busy week. We got a lot of data. We saw yields move lower, and we saw expectations all over the map for next week's September FOMC meeting. But yields ending the week down lower at 365 ahead of retail sales, some housing data, a 20-year auction, and of course, SEP FOMC.